Good morning, everyone. It looks like things are still loading in. Jason is finishing up a call, funding files, so he's currently muted, but you got me and Todd starting off with you guys with the meet and greet. So, good morning. How is everyone doing?
Doing just fine.
Fantastic, Paul. I'm glad we got someone speaking. That's really what makes these meet and greets great, just being able to have these conversations. Lots of new names, too. So I guess I'll do some brief introductions with everyone. This Team Twiford, Jason Twiford's your AE. He will be joining on shortly. We'll let him introduce himself. You got Todd on this call as well. He's been an assistant with Jason for quite a few years in the business, long time. The man behind the curtain, helps make sure all your loans get pushed through. And then I'm the young guy on the team, kind of just messing around. Only been with Jason for about a year, but always here to be a resource for you guys. Todd, if you got anything you want to jump in on.
Yeah, thanks, Dylan. Yeah, we've got a lot to share with you guys. We've got a lot of information, a lot of whatever it is you may need to know here today. We did update our piece, the header piece for this meeting today to make sure that everybody understand. Cameras on is great. We're looking for you guys to help make this meeting what it needs to be. We've got plenty of things that we can talk about that we think you need to know. I've got years and years of stuff I can show you, shortcuts that you probably never imagined. But what we really want to fill your time with is what you want to hear. So Orion may be new to you, or you may be sent us loans before and looking for what that extra oomph for your business. But whatever that is that you need today to make sure to get a loan started in your business tomorrow, please speak up and let us know what that is. We're welcome any questions whatsoever on any topics that you may have on live loans, on our system, on opportunities for marketing, anything that Orion can do to help support your business and bring success to your desk is what we want to talk about today. So does somebody have a question? Andrew, I saw you for a second and then we lost you. Ty, hello and welcome.
Derek did put in the chat, are these recorded? Yes, these will be recorded. And so we do have a kind of list of all these recordings. So if you ever need to pull back on these will be sent out to you guys. But yeah, down payment assistance did go over. It's something that we are absolutely killer on, absolutely love working on down payment assistance. Let me see what it spend time. Previous meetings were recorded. So yeah, these meetings, meet and greet, and the DPA trainings, those were recorded.
Yeah, but again, we're happy to talk about any questions, specific questions you may have about that. If you're looking for insight on how to put these into play and how to make use of what we have available, we're happy to take on those questions. Andrew, thank you very much.
I guess I'll just jump back in, seeing that you mentioned me. Good to meet you, Todd. I jumped on because I do have a file currently right now. So with you guys, I need to price to lock it. Actually, I need to do that today, I believe, but or just see what pricing looks like. But I'm doing the Elevate.
Go ahead.
Yeah, I'm doing the Elevate FHA 3.5. So
congratulations. That's a premium product for your borrower, able to get the execution of that done properly and delivered. That is a great path to put your borrower in a home, puts everybody up for the best takeout plan, and is definitely a good situation for your borrower.
Yeah, sure. So this is my first one with you guys. First time I've been with other brokers before, other brokers that have that signed up with you guys, but it's my first file that I'm doing the DAPA with. So appraisal ordered today.
Congrats.
And just
nice.
Thanks so much. And
Sure.
just moving along, and I expect to have conditions back, hopefully submitted last week. So hopefully conditions will be out. I don't know, haven't gotten them as yet, but hopefully will be out, hopefully before Friday. I'm just thinking to myself for this one, closing date is the 27th, but I'm just thinking, I guess for the future as well, I guess what is the condition that, hey, a realtor asked me yesterday, I was pushing it, just kind of promoting the product again, and they were saying, so just, hey, funds are just non-exhaustible. Funds will be available for how long? And I said, well, I haven't gotten an indication from the lender to say that funds are running out or just a source of the funds per se. But hey, we have it. I'm pushing it, and let's get your borrowers in.
Well, that is absolutely a great question. We're going to love to give you the answer to that. I noticed that Jason joined us. I'm going to go ahead and let him say hi and do a quick introduction and maybe let him lead in with that golden question.
All right. Good morning, everybody. Thank you for joining us. Andrew, great connecting with you last time, and I'm glad we got your deal in, got you all squared away. If the question was, is there a limitation or a specific amount of funding available on our grant program? There is not. It actually is just a simple FHA product that we provide. We partner with the grant provider. There is no limitation. We don't have an allocation. We will never run out of funding. So you can reassure your realtors, they can go put these clients under contract. And when the day comes, the money is available for us to be able to fund this loan for you.
Yeah, I kind of spun it like that. I didn't have that official answer from you now, but I said, hey, they're lending nationwide. So whoever their investor is, I haven't gotten an answer that, hey, their source is going to be running dry. So that's all I could really kind of put to spin it to say it that way. But I'm glad to get that official answer.
Yes.
But yeah, so far so good. The rate I have floating so far is like 7 1/8, 7 1/4. So just to kind of go and borrow paid again, like you had described to me, Jason. So to kind of give the borrower to offset any give them a rebate back as well on pricing. So yeah, just waiting to see conditions and just to move forward.
Okay, excellent. Great news. Thank you for your partnership. Thank you for your business. If you ever want to do a training for these realtors, I'm happy to jump on. Andrew, where are you located?
I'm in DC, so DC, Maryland, Virginia. I'm licensed in DC, Maryland, Virginia.
All right, I'm not driving out to meet with you. I'm in California. But if you ever want to jump on a Zoom meeting and do a training for your realtor partners, I'm happy to do that with you and partner with you. And I can just be your underwriter in the background and kind of walk them through the nuts and bolts of how the program works, how to go partner with you and sell it to the realtors. We can certainly help you with that. Would love to.
All right, fantastic. I appreciate it, Jason. Yes, sir.
Okay, and guys, Todd, Dylan, thank you. You introduced yourselves. Thanks for taking the lead. We had a little funding situation that needed to get resolved. I had to jump into at the last minute. Thank you guys for joining the call. This is really kind of atypical for us. We're normally very structured with training. This is more of an open forum, meet and greet. We're the team. I've got excellent guys here on this call, Dylan and Todd. Fantastic support for you, for your business. We value the partnership we have. John, thank you for jumping on. It's good to see you on camera. Sooners looked good. They're looking better for next year. So got to be optimistic with that one. But if this is, like I said, this is kind of a weird situation for us because we're normally very structured. Here, it's just, if you have a question, throw it in the chat, unmute yourself. You guys take the lead.
I'm the typical OU fan that thinks we're going to win the national championship every year.
That's okay. I'm the typical Broncos fan that thinks we're going to win the Super Bowl every year. So I can.
Oh, and I'm a Cowboys fan. So, I mean, I'm just like the most obnoxious. Yeah. It doesn't get any worse than Cowboys and Sooners, right?
Yes, it does. Raiders.
Oh,
That's
it does.
worse.
Yeah.
So if there's any Raiders fans on the call, we're going to apologize now. But you guys are going to have a great quarterback with this upcoming draft. So.
Yeah.
Jason, Gabriella had a question if you could talk about the conventional 3%, 1, 2, or 3% grant.
Okay, Gabriella, thank you for joining the call. The grant is available. So our DPA product is exceptional. The grant is available both FHA and conventional, free money, literally forgiven at the close of escrow. It follows AUS. Minimum credit score, 640 for the grant, but the reality is going conventional, you're going to need to be up in this probably 680 to 700 plus range to get an AUS approval. Ideally, we want a first-time home buyer, although our DPA products don't require your client to be a first-time home buyer. There are no income limits. We follow AUS. You can use co-signers. It is the most dynamic, robust DPA product menu available in the country. So specifically on the conventional grant, you can go Fannie or Freddie. You get to pick. So for example, if we've got student loans and you want to go Freddie Mac because it's 0.5% as opposed to 1%, Freddie also gives us the flexibility with 1-year tax return. It also requires 1 month bank statement on assets, where Fannie requires 2. So there are certain advantages to Fannie versus Freddie, priced generally exactly the same. And then the grant is available up to 3%. So if you've got a first-time home buyer, you're eligible for a 97% first mortgage. You could pair that with a 3% grant, provides 100% financing. In some cases, the client doesn't need as much, so we also offer it at 1% or 2%. You get to pick. So it's not like your client only qualifies for 1, 2, or 3. It's fully at your discretion as to where you want to be on that product. Follows AUS, no overlays. So you get a DU approval at a 50% DTI, we're good to go. Gabriella, did you have any specific questions on that grant program?
She did just ask, can they own a home?
So your client does not need to be a first-time home buyer. Now, if they are not, and how am I not seeing the chat with, okay, never mind. Now I see, I had to scroll down, never mind. Somebody, boomer, yeah, pretty much. But my kid said that at one point, and I'm like, what does that mean? So yeah, Derek, you're spot on here. As far as home ownership, they do not need to be a first-time home buyer. The grant specifically does have some additional requirements if they are not a first-time home buyer. If they're not a first-time home buyer, then there is an AMI restriction. It's 160% of the county AMI. Now, if your client is not a first-time home buyer and they exceed 160% of the county AMI, there are some professions that will exempt them from the income limit. So if they're a first responder, so fire, police, medical first responder, any form of medical professional, they work in a hospital, they work in a medical facility, anything from the chief of staff down to the janitorial staff is eligible for an exemption on the income. Anyone that is a teacher or educator, and I mean, we have stretched it. And I will tell you, we've offered this program for 1.5 years. I have had one buyer that was not a first-time home buyer and exceeded the income limit. She taught in a daycare, and I was able to massage that into, she was an educator and she was exempt from the income limit. Veterans, civil servants, so anybody that works for any city, county, state, municipal, governmental agency would be exempt from the income limit. So if you've got more specific questions, feel free to unmute yourself. We're happy to dive into that. But we rarely run into a problem with a buyer that does not meet the AMI requirement, or we can't figure out how to get them exempt from the AMI.
Hey, Jason, this is
Yes,
Tom
sir.
Beltling. I'm going to switch gears a little bit. Can
Absolutely.
you talk about the 12-month bank statement loan? Are you guys using 50% of the deposits, or can we work out something where we can potentially go higher with like a letter from a CPA or something?
So great question, Thomas. We've got several options for you. So standard expense factor is generally going to be 50%. That's where most borrowers are going to fall. Now, we do have certain criteria. For example, if you've got, let's say, a tax preparer, a consultant, a financial planner that works out of their home, very limited to virtually no expenses, we can drop that expense percentage down to 30%. And then we give you another option where if you do provide a CPA letter that says, hey, here's what their expense factor actually is, we can use that. I believe the floor on that program is a 15% minimum expense factor. We have gone lower than that on an exception basis when it did make sense. So multiple expense factor options to try to structure your deal. And then I would throw you another carrot, which is we've also got a P&L only program that allows you to qualify your borrower with no bank statements. So I absolutely love the P&L product from the standpoint that you aren't required to support the P&L with bank statements. Most P&L programs have to have 2 or 3 months bank statements that correspond to gross revenue or net income. Our P&L program, P&L only, no bank statements. The only bank statements we ask for is to support assets if it's a purchase, and we need that for the down payment. And Gabrielle, at your social media post for the Elevate DPA, fantastic product. We have had clients generate so much business. In fact, we are funding a streamline right now for a good client of ours who's picked up multiple deals on that Elevate grant program from his social media and is now turning those and doing streamlines. So to walk you through the process in even a little bit more detail, if you do put someone on the grant program, they need to make 6 payments, and then we're eligible to get them out. So as Andrew was talking, interest rate on the FHA grant, you're looking at somewhere around 7 1/8, 7 1/4. Market rates right now, low 6s. So we're streamlining clients that are in the low to mid 7s. And when we streamline a customer, we wrote the guides on this, we underwrite it, we fund it, we service it. By servicing that loan, when you bring it back to us as a streamline, we can reduce the impound account or net the impound account from your payoff. We pull the payoff demand for you. We net the impound account. It decreases the cash to close for your buyer significantly. So it's an exceptional opportunity. And when you bring the loan back to us, we also waive your underwriting fee. So we value and appreciate the partnership. We want to help you get your client into a home, but then we want to help you get them into a better loan after they make the 6 payments. And you're welcome, Thomas. Did that answer your questions on the bank statement and P&L program alternative?
Yes, it did. Thanks, Jason. Appreciate it.
You got it, sir. Another option, let me just throw this out, is we've got an asset utilization program that you can use as a supplemental income source. So for example, if you've got a buyer who is self-employed and we're using bank statements to qualify and they're a little short on income, ratios are too tight, and they've got some money sitting in the bank. If we're using asset utilization as supplemental income, there is no minimum amount of assets that we use. So we effectively take whatever post-close assets they will have. So let's say they had $100,000. Todd did an exceptional spreadsheet on this, gave us the details. We divide that $100,000 over 60 months. That gives your borrower about $1,600, slightly over, in additional income. If they've got $200,000 or $300,000, we just incrementally increase that. $200,000 in the bank post-close would provide your client about $3,200 a month in additional income on an asset utilization combined with any other form of documentation, whether it was, fixed income, Social Security, or pension, somebody utilizing a bank statement or a P&L transaction. It really does give us some flexibility with how we can structure your transaction to close more business for your buyers.
Hey, Jason, on that one question I had, my client actually has a co-signer on the property. And actually, he wasn't even on the title. He just actually deeded on title. And basically, so there's no seasoning. Is that going to be an issue? And then what would happen is we would quit claim the original person off at the closing and leave him on. Is there like a seasoning you have on your product?
Well, there is a seasoning. It depends. Is this a cash out or is this a rate and
No,
term?
just a rate and term. He's not going to do any cash out. It would be like a Fannie, where Fannie doesn't have any type of
1 day on
seasoning.
title. So yes, basically, if your client is on title as of the application date, so we can't put them on at the close. We've got to put them on upfront before you submit the loan.
Correct. Yeah,
1 day on
he's actually
title.
doing that now.
Yeah, we effectively follow Fannie guides on this. So this then wouldn't become a co-signer. This would be our borrower, right? Because the person that's on
Correct.
title currently is going to be deeding off on the
Correct.
transaction.
Correct.
Yes, we do
Cool.
have an opportunity to put it together that way.
Excellent. Yeah, he's in the process of doing it now with the lawyers. So once it's done, I'm assuming it has to show up on the recorder's office, or would we be able to, have it once the attorney takes it to the recorder's office, if you know what I'm saying? So
Yeah,
does
no,
it have to be recorded?
It's got to be recorded. So,
Got
but
it.
it's going to take some time to show up in public record. So if
Correct.
you get the document recorded, you have a conformed copy with the instrument number on it, and you submit that with the
That'll
file,
work.
we're going to see that he was on title, even though when we check public record on the computer, he still doesn't show up yet. There's an inherent delay with that situation.
So we're fine once you have like the stamp showing it's recorded, even though it's not showing up on public record
Yeah,
as of
you,
yet.
you have indisputable proof that this guy is on title to the property with
Cool.
that recorded deed. Absolutely. That's good
Awesome.
enough for us.
Okay, thank you very much. Appreciate it.
You got it, sir. Thank you.
Another one from me quickly. Yeah, I haven't been through all your guidelines, of course, for back to the DPAs with Aurora and Boost, but I know they're not as flexible in terms of the Elevate, which is a grant, right? Just 6 months, 6 months forgivable, or 6 months just totally, well, not givable. It was never recorded, right? So, but the
Correct.
question is just in general, the question is, when it comes down to streamlining those or just refine those, are they able to subordinate under the new first, or they're just, once they want to refi even a streamline, they just have to pay them off under Boost and Aurora?
But great question, Andrew. And thank you for your participation here. We're big fans of participation. Todd in particular loves it.
Right.
So that is a recorded second. So Aurora and Boost, whether it is a repayable or forgivable program, you're going to have a recorded second lien. That second will not subordinate. So streamlining will never be an option. However, the strategy to exit that DPA product is wait 12 months. Once we've waited 12 months, your borrower can do a rate and term refi going FHA. LTV goes up to 97.75%. So with really modest appreciation over the next 12 months, you'd be able to go ahead and refi, pay off the first and second. Because it was a purchase money second, it is considered rate and term. Because we're going FHA to FHA, you will still get an MIP refund, which can be applied to offset closing costs on the new loan. We will waive the underwriting fee when you bring it back to us and give you preferred pricing when you bring that loan in. So we really want to make sure that if you're selling this product, it's a phenomenal program to get a client into a transaction. But we also want to help you get your client out of this as quickly as possible and into the lowest market rate available for them.
Okay, sure thing. So it sounds more flexible, more feasible doing that with the 1 year of appreciation going FHA than perhaps conventional that has the same max LTV.
Yeah, but it's, but like, for example, on the Elevate, you're able to use new appraised value after 6 months. So it does give you a little bit more flexibility with how you can try to get out of that transaction.
But regardless, on Elevate, it's gone regardless after 6 months.
Yeah, there is no second, but you just, how we're going to help you get out of that higher interest rate first trust deed.
Okay. All right. Yep. I'm familiar with that concept. With, as you said there, the 97.5, and then can consolidate it. It's still a rate term since it was with the first. So I've seen that before on other DPAs before. Okay. Understood. All right.
Excellent.
Nothing else to my mind right now, but yep, thanks for that.
You got it. Thank you, sir. Okay, guys. Who's next with a question? Anybody?
Bueller.
Yes.
Yeah. Again, I guess you were also saying you could combine asset depletion with like a full doc on non-QM. You guys offer that?
I can combine asset. We call it asset utilization, but listen, we're not picky. Asset utilization, asset depletion, asset amortization. It's all the same program with us. We amortize those assets over 60 months. And you can either use that as your primary qualification, or we can use it as a supplemental income source. And yes, we can combine that with any other income documentation that we offer. So it could be full doc with asset utilization, bank statement with asset utilization, P&L with asset utilization. We offer a 1099 only program that could combine with asset utilization. Basically, you bring us whatever income streams you have, we're going to lump them all together and use that income to qualify.
And again, this is, you use what is, well, you calculate what will be available after cash to close and any reserves required.
Correct. So, for example, if your client had $500,000 in a Charles Schwab account, they're using $300,000 for down payment, closing costs, and reserves. That remaining $200,000 would be able to be utilized in an asset utilization.
So you just simply divide that by 60 months, and that's it. That will be that
well,
income.
Depending on the type of asset. So cash, checking, savings, money market, any cash equivalent is at 100%. Stocks, bonds, I believe is 70. Retirement accounts are at 80. So whatever the appropriate percentage would be is divided by 60 months.
Okay. So depending on the asset class of whatever it is, the assets. So divided by 60 months, and then whatever that is, just add that to their income for the DTI.
It's literally that simple.
Okay. And those cap out at 50% mostly, I suppose.
I'm sorry, Andrew, they cap out at what?
So at 50% on the DTI mostly, I suppose.
So when we're using asset utilization as a supplemental income, it actually caps us at 45.
Okay. Okay. But everything else on its own, I guess the highest tier is around 50.
Yes.
Bank statements. Okay.
Yeah, and we do have some exclusions to be able to go to 55 on our non-QM programs.
Okay. Well, that's a tough one though. So 55, and then because I use asset utilization, I lose 10 to go to 45. Oh, but all right, I guess I get it.
Yes. Usually the trade-off,
but I guess so.
Yeah, the trade-off to be able to use asset utilization with any other income source, I will tell you, warrants the lower DTI. And we've got interest-only options. We've got 40 years. So if we're tight on DTI, there are multiple ways to try to restructure and slice and dice this to get your client to qualify.
Interest only on bank statements and just full docs as well.
Interest only on bank statement. Well, so for our non-QM, we have interest only on full doc, bank statement, P&L only. We offer it across the board. And we do have multiple options under our non-QM umbrella where we could qualify similar to Freddie Mac, 1-year tax returns. However, it only requires your borrower to be self-employed for 2 years, not 5 years like Fannie and Freddie would require. So it gives you more flexibility in that respect. So we have a lot of really, what I would encourage, if you got a weird wonky deal, give us a call. We'll figure out how to put it together with you.
Yeah, it sounds like it, but, and again, that's regardless of occupancy. You can do interest only on the bank statements on primary residences.
We do interest only on primary. We do interest only on second home. We do interest only on non-owners. Our DSCR program is exceptional. We have multiple options. Our DSCR will take first-time investors. We take first-time home buyers. So somebody that does not own a primary residence could be eligible for our DSCR program, which is really unheard of in the marketplace. Credit scores down to a 620. We have a true no ratio program where our minimum DSCR is 0.01, where most people want to be 1% and above. We go all the way down to, we don't care how much your property rents for, we have a loan program for you. Available in 35 additional states with no licensing required. So, Andrew, for example, you're there, Maryland, DC, that area. If you came across a deal in Tennessee or Georgia or Florida, you would be able to place that on our DSCR program with no license. If we've got some VA guys out here, we are exceptional at VA. Charge more than 1% going borrower paid. We do joint entitlement. We just structured a deal this morning and saved the day for a client where we've got a veteran who does not meet the residual income requirement, and basically got a notice to perform. Their transaction was canceled. We're stepping in. We're going to get this closed. We're bringing in dad, who is also a veteran, as a non-occupant co-signer, allocating 12.5% of the entitlement to father and son, and we're doing 100% financing on a VA transaction with a non-occupant co-signer. And everyone else told this guy it was impossible to get done. The deal was dead, and we are going to close this transaction. So if you've got a VA buyer or a VA scenario, please give us a call. We are exceptional at VA. We understand how to put these deals together, and we can give you options that nobody else even understands exist.
I don't do a lot of VA, but I did have, that was maybe my last VA scenario I've had before that sounds similar. So you're saying 100% financing, so they didn't need a down payment. Oh no, I had a couple that weren't married. But then so if they're not married, right, then a down payment is required. That came out to
If
be
they're
around
not
what?
married, they'd have to come in with 12.5% down. What was unique about this situation is both
Okay.
father and son were veterans, and I can split the entitlement between the two and therefore keep them at 100%. It's not a manual underwrite. It's not a pre-authorization from VA. We're not going to send this to VA to be underwritten, kind of behind the scenes like we would have to if it was a fiance situation or boyfriend, girlfriend, where we're bringing in two people that are not married. So, again, this just demonstrates our ability to really understand your transaction and help you structure this and put it together in a way that most lenders either don't understand to or don't have the ability to.
Understood. Okay. All right. Thanks so much. Yep.
Okay. All
Jason,
right,
what is, oh, you jumping off? I just have a
Oh, no,
quick
no,
question.
no. Esco, go ahead. I'm sorry, sir.
What is the max DTI for a manual underwrite on the VA?
So I don't know that there is a right answer to this. Our answer is 50%. That is the max that we will do on a manual underwrite, 50-50. So it's not like FHA where you've got to be at 40-50 or lower, depending on compensating factors. We'll go 50-50. There are some lenders that will go 55. I've reached out to see, hey, if they're doing it, why aren't we doing it? And it's a risk factor. It even gets into warehouse lines, in being able to sell to different investors. But the general answer, most lenders are going to be capped at 50%. There are a handful that will go higher than that, but I've never seen anybody go above 55.
Gotcha. Thanks.
You're welcome. And I don't know if the guys mentioned it. We do have our own dedicated operations team. So setup, account management, underwriting, funding. We've got the best of the best at Orion Landing. I've got 2 VA underwriters. They understand how to put VA deals together, how to stretch it, how to push the envelope. So if you've got a VA manual underwrite, please give us a call. We're happy to walk you through it, do any research we need to up front, and find a way to get your deal put together and get it closed for you.
Yeah, well, that's what I come from, that VA manual underwriting industry. So I have a lot of people call me on those.
Oh, well, fantastic. Yeah, please give us a call when you've got a VA manual underwrite. We are jumping at the bit to help you get that closed.
Will do.
Okay, thank you, sir.
Thank you.
All right, Arnold, I gotta call you out here because your initials are AK, which is what's showing up on my screen. I grew up in Alaska, so AK hits home for me. Anything we can help you with, sir? We'll take that as a no. Okay, guys, anything else? Any other questions? Anything else that we would like to discuss? Programs, scenarios, files? Andrew's
Yeah, I was
coming
just
back.
looking
I
in.
saw the mic come down.
Yeah, I was just looking back in my file, just logging into the portal to see if anything pops up that warrants a question from what I have here so far in my file right now. But I gosh, let me see here. Yeah, I just
Andrew,
need to.
what's the last name on your file?
It's Cook, C-O-O-K.
Okay. I'm going to pull it up right now just in case you have any questions on that.
Yeah, I'm just looking to see. Yep, I know I'm close on that DTI and those ratios, but looks like we're good. I don't recall being that, but and really, I didn't even run AUS. I guess the processor ran AUS on this, so I suppose it's all good. But I had
Yeah,
run
we had
AUS.
AUS run. AUS is run on every file before they move into underwriting, so that nobody's getting any surprises. But yeah, your
Yeah, of
file's
course.
in. It's an underwriting. We should have that loan approval over to you today.
Got you. What are you seeing as the income being used there? Just quickly.
Well, it's going to be whatever income you uploaded. We haven't had an underwriter
Okay.
jump into the file yet and calculate income, but we'll have that to you today.
Okay. The VOE is there as well. I ordered that, so that should be simple enough.
Excellent.
I don't like
Those
all
are
that
those
back
are scary
range.
words. Every time I look at a file and I'm like, this one should be simple, it's making a right-hand turn where I'm like, okay, we were supposed to turn left. But I'm sure this one really will be simple.
Yeah, I just don't recall my back ratio being that high though. Let me look to see if there's something not being paid off, perhaps, or something that's not omitted. But all right, I'll look for that as you said today, and we go from here. I'll let you know if I have any concerns about it. I guess on my end, lastly, what you mentioned the over 1% on the borrower paid comfort VA. What are you seeing as the most that can be charged going borrower paid on
So
VA?
the limitation on that is going to be one of two options. The way that we're able to do this is you've got, so VA has their list of non-allowable fees. Your origination fee is a non-allowable. So the way that we can structure this is I have to be able to itemize your fee and pay it either out of lender credit or seller credit. So the maximum you're able to charge is limited by the amount of lender credit or seller credit that's available. So for example, if you locked the rate, your company has a comp plan, I believe 2.25 or 2.5. So let's say you locked a rate that was paying 1.75 in lender credit. You would then be able to go borrower paid and charge up to 1.75. I would allocate the lender credit to your origination fee, remove it from the list of non-allowables, and logistically, that is exactly how we are able to do this. Now, we've had scenarios where there's a 2% seller credit. As long as I can itemize your fee in either lender credit or seller credit, it's acceptable. So if you had a 2% seller credit, you would be able to charge 2%. We would itemize that fee, remove it from the list of non-allowables, and that's how much you could charge. So there's not an actual percentage or dollar amount. The limitation is based on the availability of lender credit or seller credit to be able to remove your compensation from the list of non-allowables.
Got you. All right. Very, very detailed answer. Thank you, sir.
You're welcome, Andrew.
Back to the Cook file. The realtor did call me yesterday asking if we can close early. And I said, I'll have a better answer. So I almost forgot that. Of all the things I'm talking about, I almost forgot to ask you that if based on where we are, conditions coming out today, if we can close by the 23rd. I said I'll have a better answer for you by today. The 23rd.
I mean, the 23rd is over 2 weeks away. We should, I mean, we can close these in 10 to 12 days total, and we're already a couple days in. So
right.
Really, the quickest we can close from the time we disclosed is 8 days. That's the quickest we can deliver on a TRID-based loan.
Right.
The question really boils down to how quickly can you get conditions to us? We're going to send an approval out today. You get conditions into us in the next 24 to 48 hours. You get the appraisal ordered. I mean, it's feasible that we could close this by the end of next week. So
Okay.
absolutely. Now, I don't like to overcommit because a lot of that is dependent on getting the appraisal in, not running into appraisal
Of course.
conditions and issues, making sure that you get your conditions in, which means your borrower needs to be participating and getting you what you're
course.
asking for in a timely manner. But as far as our ability collectively between you and I to get this wrapped up, I mean, we could have it closed by the end of next week for sure.
Okay, fantastic. That's what I told the realtor as well. I just, with the caveat of the DPA, I didn't know if there were maybe an additional turn time with the DPA, or I guess
No.
that's a question too. Does it make a difference if it's Elevate or Aurora? Does it add to the turn times for recording the lead, not recording, or what the case may be? Does it add? I guess.
Makes no difference to us. We underwrite it like an FHA or a conventional loan in the same turn times. So whether you're DPA or standard FHA, you're going to get the same service, same turn time. You won't see any difference between the two. And our turn
Okay.
times are excellent.
Okay. Just,
Yeah.
I guess, as you're saying, you guys do it all there. So I guess, in the past, some lenders would have said, oh, we need an addition after CTC, we need an additional 3 days for the whatever that needs to be done for the DPA, right? So I guess that's not the case for you
Yeah,
guys.
no, we don't. So that's what you see when you're participating with a city, county, state, some
The
type of
state
community
bonds.
program,
Yep.
where we get CTC, then it gets shipped out. Like we're in California.
Right.
Well, I'm in California, but we deal with the state of California. Once you're CTC'd, it gets sent up to Sacramento. You're looking at another 7 to 10 days. They may add conditions. This is why our DPA is so successful, because we do everything and we do it seamlessly, where you don't have to provide multiple packages. You don't have to, there's no reservation of funds. We don't run out of money. So you are going to be so pleasantly surprised with this DPA experience. It's going to blow you away.
Okay. My board did have I know we're talking, I have more that just come to me as more questions, but my board did have a question that to say, I guess how, and even for me, what will it look like towards the back end as we're going towards balancing the CD with title, and what will they be signing, any extra addendums at closing that's different? Because I know it's still not recorded, but anything that just pops out different than a normal first trust closing.
So the only thing that's going to happen that's different, so balancing is all done at CD. We will balance with the closer when we're ready to close. They're going to sign an addendum that says if they try to pay the loan off within 6 months or 6 payments, that they've got to pay the grant back. And we do that specifically to prevent you from getting an early payoff, because the last thing I want to do is get this client closed and then call you in 5 months and say, you have to pay your commission back because your client paid that first mortgage off in the EPO period. So while the grant is truly forgiven at the close of escrow, we do an addendum that is a safeguard to prevent your early payoff.
Okay. All right. So that's it. That's all they're signing at closing. That's different than anything else.
That's it.
Okay.
That's it. All right. And hey, Carlos, you had a question. Minimum credit score. So our DPA programs go down to a 600, but on these lower credit scores, we are looking at FHA, 640 and above. You do have the option to flip to conventional, but we're not going to get an AUS approval. So your situation, they don't need to be a first-time home buyer, but in order to use rental income on a departing residence, we do follow all of HUD guidelines. So if they're not moving 100 miles, they wouldn't be able to use rental income. If they're not, if they don't have 25% equity, they would not be able to use rental income. And those are straight HUD guidelines, which apply to all of our DPA programs. So
Awesome.
in a perfect world, if you've got a retained property, we would try to plug them in conventional, because it gives us a lot more flexibility with how we would structure that.
Beautiful. That's exactly it. Thank you so much. And Dylan did answer that. So I just wanted to make sure, because I got a few people that I need to send. Okay, awesome. Thank you guys.
You're welcome. Thank you for joining the call.
Yes, sorry for being late.
No. Hey, we're just glad you're here. So you get to be as late as you want.
Thank you, gentlemen.
You got it. All right, guys.
Hey, I was just really quick. I know I've been hugging the questions here, but real quick on this one. I saw the minimum lock you guys have. Lock period is 30 days. No 15. No nothing less than 30 day lock.
No, we'll do 15-day locks.
I'm in the pricing right now on this same file here. I'm seeing
The
30,
reason you
45,
don't
and
have a
50.
15-day lock available is because your loan is not approved yet. So
Okay.
we don't want to set you up for disaster by allowing you to do a short-term lock before the loan is approved. Once you have loan approval and you've got an opportunity to review the conditions, then you're in a position to do a 15-day lock. But so we do allow you to pre-lock. You can lock directly from our quick pricer. But if you want to do a quick pricer lock, you want to do any kind of a pre-lock, it is going to be a minimum 30 days.
Okay. Anything customizable? Anything customizable? Let's say half that 22 days, or you guys don't have that?
No, you're at 15 or 30
Okay. All right, just
or
thought I'd
longer
ask.
term, 45 and 60. But then we do allow you to extend on even a daily basis by 7, 14, 15, 21 days. Your extensions have a lot more flexibility. But the initial lock term is going to be 15, 30, 45, or 60.
What's the per day cost to extend? How many bips?
3 basis points.
3 basis points. Okay. All right. Thank you, sir.
Okay, John, Ty, any questions for you gentlemen?
I don't have anything right now. A lot of the questions I may have had of people have gotten out ahead of. So if I come up with something, I'll be sure to chime in.
Okay, sounds good. Thanks for joining the call, Ty.
I have a deal right now. I may be switching to you.
Okay.
Okay.
It's cash
That's-
cash out refi, self-employed borrower. He's been self-employed for 5 years, and so we submitted 1-year tax returns. They came back, said, "Oh, we want 2." Then all of a sudden they said, "Oh, now we're gonna deduct a loss from 1 year of the most recent year on another business that he's a partnership with." And they're taking that loss divided by 12, even though the previous year the partnership showed a profit. If they offset it, it would be a very minimal deduction. The
So
primary business that he owns showed increasing income, significant increasing income. So his adjusted totals were very similar from 1 year to the next, almost dollar to the dollar. I mean, it was like 62 grand both years net, but one business showed a significant increase, the other one showed a loss. They're taking the loss divided by 12, subtracting it from a 2-year average on the increasing income from business A.
but why would they ask for a second year of taxes? If your client's been
Yeah.
self-employed, are you going Freddie on this?
Probably Fannie.
Okay, Fannie's a little
So,
more weird and wonky with how
we're gonna get
their
it.
verbiage
I don't care
is.
if we go Freddie.
Yeah,
It
I
was
would go
just like,
Freddie. If they have been self-employed for 5 years, there should be absolutely no reason we're asking
Yeah.
you for, and they've been self-employed for 5 years on both businesses.
confirm that, Ty, right?
Well,
We got
the
a
only
CPA
reason that they
letter?
had asked for because originally it was the 1-year tax return. They came back and asked for the second because they were asking for proof showing that the business had been around for 5 years. Well, he'd been self-employed for 5 years, but was having difficulty coming up with something. Like it would have been simple just to get a CPA letter or something saying he's been
Can you
in
get,
business
so
for
can you
5
get a
years.
CPA letter that says my client's been self-employed for 5 years?
I don't know if that's been run past them. Have you asked him about
Well,
that,
yeah,
Doug?
we
As long as you
we
can get a
did.
as long as you can get a CPA letter that says he's been self-employed for 5 years, I'm going to
Okay.
get 1 year of tax returns. I'm going to deal with what's on the 1 year, because getting a second year isn't going to support that he's been self-employed for 5 years. So they're basically discounting that 5-year window of opportunity and just giving you the 24-month average. Or if there's the crazy thing is, if I got a loss, I'm going to give you 12 months. But if I've got income, I'm going to average over 24.
Correct.
So especially if it's increasing.
It was like a double dipping.
Yeah, they're
of,
giving you the double whammy. So I'm
hammering
assuming they probably have not filed 25 yet. So we will take their 24 from both businesses and just utilize whatever that income boils down to be.
Yeah, we were using 25 only at the beginning.
Okay,
We were
then I
fine.
will use 25 only, as long as, we can prove that they're, either get transcripts or prove they were
Yeah.
e-filed with some validation that they either paid their taxes or they're on a payment arrangement. We could put that together. Get me a CPA letter that said they've been self-employed for 5+ years. We're
Okay.
good to go.
Yeah, so we may be getting that one over to you. We'll probably have the final verdict today, but it was
Okay.
just kind of like, it was a slam dunk. I looked at the income way before we started, like, hey, we're good. And then
Yeah.
in the last 3 days, it just turned into a cluster. So
It is amazing how something that looks so good can make that crazy turn, and all of a sudden you're in Clusterville.
but no, I appreciate you guys. I've enjoyed working with you, and I really want to get some more of those DPAs. I love doing VAs with you.
Good.
You guys just make it make sense, and you got quick response. So
Well, thank you. Thank you for the kind words, and thank you for your partnership. It's been a pleasure working with you guys.
yeah,
Yeah, happy to see Wilbanks come in through too to do that streamline. Now
Yeah.
that we're out of that grant.
mm-hmm.
Yep.
I love it.
Okay, guys. Anybody that's on the call, any other questions that we can help you with? Anything else in the chat? Looks like we're good. Okay. Going once? Anybody? Going twice? All right, guys. Everyone that's on the call will get a copy of this recording. In closing, thank you guys very much for joining the call. We value and appreciate the partnership. We value and appreciate your business. We realize you have a lot of choices out there with lenders. We want to make sure we take very good care of you. Carlos, did you have one last question?
Thank you. No, just want to say thank you, and I appreciate you having this ongoing meetings as we do more and more. I think it's very valuable. What you guys, I've closed deals with you guys already, and I've been very happy. So as I get to know your products and you guys better, I know it's just going to be an easier road to follow. So I
Good.
appreciate that.
Well, and this is why we like to do it, because we want you to know the products, but we also want you to know us. And I think that that's such a lost piece of our business. I mean, I started in '93. There was no Zoom. There was no, everybody was still in their office. I could drive around with my phone book and my Thomas guide. People don't like, Dylan doesn't even know what that is. And, so we've just lost that connection, which is why we like to get here, be on camera and just say, hey, here we are. Thank you for your business. And it's kind of like we're sitting down in your office. So it's as close as we're going to get. But yeah, I know Andrew was 3 years old in 1993 when I started. So Ty was just a twinkle in his father's eyes. So
yeah, exactly. But yeah, appreciate you guys.
okay, thank you guys. And if there's anything you need, I know Andrew, you've got an active file. Ty, John, you've got some active business with us. If there's anything you need, no egos on the team. Call me, call Dylan, call Todd. Just get a hold of somebody and we're here to help.
Thank you, guys.
All right, guys.
Appreciate it.
Thank you.
Have a
Thank you.
Thanks,
fantastic
gentlemen.
day.
Thank you, guys. All right, I'm going to end the event.